Hello everybody, it's Tortoise Investing coming at you today with 3 dividend stocks that you can buy and hold forever. Today we're going to be taking a look at Deere & Company, the Hershey Company, and AbbVie Inc. Before we dive into those, if you're new, please hit that subscribe button, drop a like down below. I greatly appreciate any and all support. Makes the YouTube algorithm super happy. And now before we dive into everything, going to take a quick look at my personal portfolio. Never going to hide this from you. It's going to show it to you in every single video. And yeah, none of this financial advice to your own research for buying any stocks. Let's go. Here's the portfolio up 23.6% year to date. Looking very nice. These are our holdings currently, allocation percentages. And if we take a look here at the holdings tab, these are our top 3 performers. Got Apple, Texas Roadhouse, and Canadian National Railway. Bottom 3, SCHD, Extra Space Storage, and Hershey. Extra Space Storage, that's my comeback play right there. That thing was down 26% at one point, and we have fought back. I held on, iron hand, believe in the company long term, still do, and I still like Hershey at these values. Now, the companies we're taking a look at, got Deere & Company here. Adjusted free cash flow yield of 2.52%, dividend yield of 1.4%, payout ratio super low at 14%. Now, this was at a recent high of over $440, now down to $370. Take a look here at the revenue growth over the last 5 years, 7.6%. Very nice. Free cash flow, little bit of everywhere. That's how this company's always been with its free cash flow for some reason. I don't know if they can consistently do buybacks or if it's I'm not sure what's going on, but it's never, negative for a long time when it is negative. But consistently have cash on hand. EPS right at 10%, 9.8% over the last 10 years. Very nice. They've got accelerated growth over the last 5 years at 26%. Take a look at the quarterly here for the debt. The debt's $37.78 billion. If you add these up here, I think this comes up to about $14 billion, and they still got a quarter to go for their EBITDA. So that does fall in line with my rule of thumb when it comes to debt. I don't like companies that have more than 3 times their EBITDA in debt. The less than that, I feel, is healthy debt. I mean, no debt is really healthy, but if you're going to have some, let it be manageable. Now, the dividend's been increased at a rate of 10.22% over the last 10 years. Some very nice compounding going on. We do have some periods here of no raises, and then we have periods of just gigantic raises. So, I mean, over time, you are getting a pretty good double-digit increase on your dividend. And the shares outstanding, they are buying back shares over the last 10 years at a rate of 2.37%. Very nice. We'll take a look here at the quarterly. Yeah, looks like they're still buying back shares, 292 million shares total, so they are bought back even more this year. And the return on capital employed, very nice. Usually company averages around 9-10%. This is, as of last year, 17.9%, so very, very nice. Strong ROCE, love to see it. Next up, Hershey Company is one of my favorites. Just a free cash flow yield of 4.06%. This at one point was over $270. I personally jumped in the 220s and have just been buying as it's dropping. $191, that's pretty good in my eyes. Again, do your own research before investing anything. Got dividend yield 2.49%, payout ratio 46%, pretty good. Over the last 5 years, revenue 6.75%. Free cash flow, 8.27% over the last 10 years. Over the last 5 years, 12.76%. So again, nice double-digit growth over the last 5 years for free cash flow. We look at it per share. It is a little bit more, which means they are buying back those shares. EPS been growing at a rate of 10.61% over the last 10 years. Very nice. Debt last year was $3 billion. Their EBITDA was $2 billion. Take a look here at the quarterly. 3.7, so still yet going to be right in line with my not more than 3 times rule. It's really not even going to be 2 times, which is, pretty manageable. I like to see that. Dividend's been increased. I read 9.41% over the last 10 years. Here recently, over the last 2 years, though, rate of 15%. They are increasing the amount that they give you when it comes to their dividend. You're getting bigger and bigger hikes, which is nice. They don't really do share buybacks all that often. 0.9% over the last 10 years. I mean, they're slowly nibbling at it, but they give you that return with the dividend increases. And I guess reason being is they feel like the stock is never really on sale that often. But right now, I hope they're taking advantage of it. Return on capital employed, beautiful. 2020 it was at 19%, 2021 20.3%, and 2022 21.8%. So again, strong company, revenue growth, cash flow growth, nice double-digit increases out of your dividend, and a strong return on capital employed. Now, next up, we got AbbVie. AbbVie has a adjusted free cash flow yield of 9.81%, dividend yield of 4.48%. This payout ratio is wrong. I don't know what's up with that, but I think their payout ratio is around 55-60%, somewhere around that area. AbbVie has had a interesting year. $164, now down near that low. I think it at one point was a little bit lower, 133 back in June. But 138, if you're looking for a healthcare stock, might be something to look into. I know they're big. They lost their main rights to, I think it's Humira, but they got a bunch of other drugs in the pipeline. A lot of new medications and stuff that are going to be still generating some pretty good revenue, some pretty good cash flow going forward. Speaking of revenue over the last 10 years, 12.19%. Very nice. Free cash flow, just right at 15% over the last 10 years. That is beautiful. EPS, 7% growth over the last 10 years. Over the last 5 years, right at 15%. Again, pretty nice. They had that 2020 dip. That's probably thrown it off a little bit. Not too bad, though. Debt, they have $59 billion in debt. Their EBITDA last year was $26 billion. So, again, still right in line with everything. It's not more than 3 times. And the dividend's been increased at a rate of 14.51% over the last 10 years. Their last hike was a lot less at, 4.5%, I do believe. But again, they've had a rough year so far, so I think that's probably what attributes to that. But I think everything's going to get right back on track. Again, for investing in anything, do your own research and stuff. But I like the stock and do think that it might be at a good value for some folks. The shares outstanding, let me look at a quarterly here and see if they've been doing anything. Pretty flat. They've not really been doing too much in that department. Return on capital employed, they had their hiccup in 2020. Pretty much everything had their hiccup in 2020. But besides that, right back in line, 16-17% ROCE. So, 3 dividend stocks you can buy and hold forever. I hope you've enjoyed that. As always, make sure to hit the subscribe button. If you're new, drop a like down below. And until next time, take care. See yous.